Thank you very much. Respected Finance Minister of India, Shri Pranab Mukherjee, Mr. Rajkumar Dhoot, Member Parliament, Mr. M.D. Mallya, Chairman and Managing Director, Bank of Baroda, other distinguished dignitaries on the dais, and distinguished ladies and gentlemen present here. At the outset, I thank the Finance Minister for having chosen me for this responsibility of heading the largest bank of the country. I consider it a great honor, also a responsibility and an occasion to serve the society. Now, today's topic, of course, is very contemporary, and there have been mixed reactions on the budget, but relating the budget to the financial inclusion, I think we have not seen this kind of funds flow for capitalization of public sector banks. And speaking for State Bank of India itself, this year we received rupees 8,000 crores as Tier 1 capital. And all the public sector banks have received generous doses of capital, either from the government or through the Life Insurance Corporation, which has helped us to position ourselves for carrying on the good work of financial inclusion. Just to put it in perspective, from the 80s to 2010, in the 30 years, the asset to GDP ratio, the bank asset to GDP ratio of the country has moved from 31% to 93%. The credit to GDP ratio has moved from 19% to 51%. And the deposit to GDP ratio has moved from 30% to 69%. So all in all, this sharp acceleration in all these ratios have transformed the country in terms of rates of economic growth. So in a way, it can be said that the rapid rate of economic growth we have seen in the last 10-15 years can be attributed to the spread of the banking system and what we call penetration of banking in the economy. But there is still so much more to do. In fact, India today is a country which has one of the highest currency circulation with the public. This is as much as 10 lakh crores. Now, if by some mechanism a part of this money can be brought into the banking system, it would have a great significant boosting effect for the economy. Similarly, in the case of agriculture, in which 40% of our people depend for livelihood, the subvention scheme of the government, wherein the government provides a 2% subsidy for every farm loan given, has been very helpful, and the increased direction of credit to agriculture sector has helped us to achieve self-sufficiency and, may we say, surplus in food grain production. It would be useful to particularly consider extending this subvention for agriculture term credit for creating fixed assets. Another aspect of this budget has been the announcement of the creation of a credit guarantee scheme for education loans or student loans. This was a request we made a year back to the Finance Minister, and it is a testimony of his reception and how much he listens to the different views that he kept it in mind to incorporate this in this year's budget. We are sure that with this credit guarantee scheme, the student loan scheme would accelerate and would help India become a real knowledge economy. So this forum's deliberations would be very useful. I would just sound a note of caution that this year the deposit growth of the banking system has been slightly less. In fact, considerably less. It is expected to be about 14 to 15% compared to 18 to 19%. All of us need to understand and analyze this, because a lower deposit growth means lesser capital available for national development. But I am sure with the different views and insights coming in this conference, it would help us to find an answer to this dilemma, and the deliberations of the conference would be extremely useful for achieving the goal of financial inclusion. Once again, I thank the organizers for this opportunity and would like to benefit from the exchange of views that is possible at this forum.